I recently made a video on the best monthly paying dividend ETFs, and you guys enjoyed the video. I enjoyed the video. Win-win. But we now live in a world where there's weekly income ETFs. This is TGIF. It's by SoFi. It's a new financial product. It came into existence in October of 2020. So not an extensive history, but it is what they call the first weekly income ETF. And in this video, I want to take a look at it and see if it's any good. So let's get right into it. The fund description: TGIF seeks to provide weekly income by investing in investment grade and high yield fixed income securities. So the first major note is that this is not an equity ETF. Most things I talk about on this channel are dividends and you have equity in companies. This is not that. This is fixed income securities, aka you're investing in debt and you collect interest payments on that debt. Get paid on Friday. TGIF is the first ever ETF that seeks to distribute income on a weekly basis. Diversified exposure to over 100 bonds across multiple industries and capital structure helps manage risk. It's also professionally managed with over 30 years of experience, and there's short-term duration, so the portfolio will target a duration of less than 3 years with the goal to reduce interest rate risk relative to longer date bonds. So they try to have some kind of risk management here as well. So that's the ETF in a nutshell. And as mentioned, this is fixed income, so you're buying debt. And if we look at the top 10 holdings, these are the companies whose debt you're buying and whose interest you will be collecting if you invest in this ETF. Now, the next thing I tried to do was find the exact debt that this ETF buys into, because it can be pretty complicated. So the fund may invest in a variety of fixed income instruments with fixed or floating interest rates. The fund may hold US government securities, including Treasury securities and TIPS, along with agency bonds. The fund may also invest in corporate debt, commercial and residential mortgage-backed securities, asset-backed securities, ABS, municipal securities, convertible securities, pass-through securities, and US dollar-denominated securities issued or guaranteed by foreign governments. So essentially, this ETF invests in all the debt. That's one way to put it. They invest in a lot of different types of bonds. Now, the next thing I like to do is find comparables so we can get a better understanding of what this ETF is most related to. So if I come over to my brokerage and I filter by bond funds, we have some of the heavy hitters. We have the total bond market ETF, we have total international, we have short-term, intermediary term, LQD, which is investment grade corporate bonds, we have treasury bonds, TIPS, along with those mortgage-backed securities. So the plan was to compare TGIF versus all of these funds to see which one it's more similar to. Unfortunately, this tool that I love doesn't work with these bond funds. I know it's a bummer. I was extremely disappointed. They do have another tool we could use. It's not going to be as good, but it's something. And this is simply going to show you the focus of the fund. So if we come over here and we type in TGIF and hit search, this is going to give us some more info on the ETF. So the trailing yield is only 1.6%. So not really great for income, even though it's an income fund. But if we come down here, we can see this. This is the breakdown of the ETF. And this breakdown is going to show us exactly what proportions of this ETF have the various types of debt that we just saw in this document. So the vast majority of this ETF, about 80% of it, is made out of corporate bonds. Now, this doesn't tell you the makeup or the split between investment grade corporate bonds and high yield junk corporate bonds. And to figure that out, we can come over to ETF.com and do some comparisons. So we're looking at the total return chart for TGIF. Now keep in mind the history doesn't go back that far, so we can only get so much info, but it's better than nothing. But the plan here is just to compare it versus investment grade corporate bond ETFs and junk bond ETFs and see which one it's more closely related to. So LQD is investment grade corporate bonds, and this is the relationship. Now let's also type in HYG, which are the high yield junk bonds. And this is pretty telling. So we can see TGIF is way more closely related to the high yield junk bonds versus the investment grade corporate bonds. So if we come back to this, out of this 80% of the makeup of TGIF, most of this is high yield junk bonds. Now, there are some other slices of this that make up a smaller portion. So the municipal bonds can be represented by MUB. This is the relationship with that. We can also put in TIPS, which are the US Treasury Bonds. So we can see the relationship there. Another one are VMBS. These are those mortgage-backed securities. And we can see there's not much of those within TGIF. Okay, so my general thoughts and opinions on this ETF is, first, it's fixed income, which is debt and bonds. And a lot of people, including myself, do not think this is the best place to be. Equity income ETFs, I talk a lot about on this channel, in my opinion, are just a much better vessel for achieving the same end. Because if you just quickly look at the total bond market ETF and look at the past year performance, it's not very good versus one of my favorite monthly dividend ETFs, Divo, which in that same time frame went up 33% and has a higher dividend yield. So there's that, which is a pretty big caveat, and none of these products exist in a vacuum, so you always have to take into consideration the competition. However, fixed income is a lot less volatile, so it could fulfill that niche role inside of your portfolio. So there's that. But competition aside, TGIF is most similar to this bond ETF. It's the high yield corporate junk bonds, and any differences between this and TGIF really comes down to just marketing done by SoFi. So this pays weekly. That's pretty interesting. It has a fun ticker symbol, but at the end of the day, it's very similar to HYG, and you're just buying the debt of these companies. It could be a good thing, it could be a bad thing, but just don't get lost in the marketing of SoFi. And as mentioned, fixed income does have a place in a lot of people's portfolio, so there's that to consider. But that's the end of the video. I hope you guys enjoyed and got something out of it. If you did and you're still watching, please give the video a like. It helps out the channel a lot. But I will see you guys in the next one.